Hi there, this is Sean Brodrick for UncommonWisdomDaily.com. You've probably noticed that stocks are trending higher, bonds are trending higher, and precious metals are trending higher all at the same time. There's a good reason for this. Governments around the world are flooding the markets with liquidity, loaning money to banks at very cheap rates. So here's my first point. As long as the flood of government money continues, stocks, bonds, and precious metals should probably continue to trend higher. Just in the U.S. alone, the Fed has purchased $1.24 trillion in Treasury and agency securities. At the same time, the Fed is holding its key interest rate at essentially zero. Result, banks are getting to trade nearly worthless securities for cash, while at the same time they're able to borrow money at very low rates. Of course they're going to invest that money in stocks and bonds and gold. This is one of the reasons why we've seen stocks rally and rally so hard since March. And this rally probably isn't over. The White House is trying to reinflate the financial bubble, and they're doing a pretty darn good job of it. This brings me to my second point. Since the market is rising on a flood of liquidity, in the short term, fundamentals don't really matter. Next, we'll see all the investors that are sitting on the sidelines come in and buy any pullback. Money market funds in the U.S. contain $3.5 trillion as of last Wednesday, according to the Investment Company Institute. That's down from a March peak of $3.9 trillion, but it is still huge. As that money gets put back to work, stocks, bonds, and precious metals will probably keep marching higher. All good things must end, though. The Fed may be reinflating the bubble, but their scheme has a shaky foundation. The U.S. dollar. The flood of dollars is debasing our currency, and the Chinese are really getting ticked off about this. They have announced they are incrementally moving their $2 trillion of foreign exchange reserves away from U.S. dollar-based assets and into assets based on the euro and other currencies. Take a look at this chart. You can see how foreign purchases of long-term U.S. securities are plunging. This is why the Fed has to buy U.S. treasuries. This Ponzi scheme can't go on forever. Eventually, the U.S. dollar will crumble, and probably U.S. dollar-denominated debt along with it. For now, you can probably buy stocks, bonds, and metals. ETFs including the SPY, which tracks the S&P 500, the TLT, which tracks long-dated U.S. bonds, and the GLD, which tracks gold. Do your own due diligence and make sure these investments are right for you. But longer term, I think we're headed for a currency crisis. And you're going to want to own physical gold and silver, as well as stocks of miners that are leveraged to the price of physical gold and silver, especially foreign miners. Other hard assets should also do well longer term if the dollar really sinks. I'll be talking more about this in my UncommonWisdomDaily.com column for Friday. Tune in then, and thanks for watching.